All right, so here we have lecture 11 and lecture 12. There's the AM session tape read and the PM session review. Again, these are my notes. I'm not trying to be a shortcut that like I'll probably continue to say this again, but if I don't say this in one of these videos, these are just for me. So um, if you get offended, then I don't know what to tell you, but other than you're pretty soft. So what are we looking for? We're waiting for one side to be made jagged, and then we're looking for a run to that opposing side. What is more probable to happen than use PD arrays to trade in sync with that, looking for that manipulation, and that's simple. Just looking for manipulation, then looking for a PD array to get in line with that. That's all it is. ICT went over the Reaper fair value gap in here, and he kind of I'm not gonna go into too much of this because I don't we don't have it, like ICT hasn't shared too much about the Reaper, but pretty much it's a narrative fair value gap is what he's kind of saying. Um, Here's influential gaps: the first trading day of the month, the first fair value gap after 9:30, which I'm not going to honestly pay too much attention to because I honestly, it's not needed. It's not needed. If it was needed, he would have discussed it before now. If it was needed, it would have been in the 2022 mentorship. If it was needed, it would have been all over that 2022, all over like all you need is 2022 model in my opinion, and that's what I'm currently sticking to, and the 2022 model and then inversion fair value gap. But this is kind of my markup of the Reaper. You have what do you have? You have a breaker here, and then you have a stop hunt that happens, and then you have a trade back into that inversion fair value gap into that breaker, and then we expand higher. So this is kind of just a schematic that I've drawn from my current knowledge. But although I don't really use the Reaper, I never have, and I most likely won't really unless we go into deeper unless he goes into deeper study of that. New week opening gap. This week's new week opening gap will act like a black hole, so put more significance on the current new week opening gap and the current new day opening gap. Although there's other new day opening gaps and new week opening gaps, so will still hold significance as we've seen time and time again. You went over that there's no 20 to 40 minute macro, so like um, from 10:20 to 10:40, that is a macro, which I've never used this, so I'm not really gonna pay too much attention to that. If it's the right time for price runs to occur, then they will. If it's not the right time, then it's not gonna happen. Time is most important. Time then price. I feel like that's pretty basic knowledge at this point. And then he went over wicks, two wicks that overlap each other. That's a balanced price range, and it's just what we can use to measure order flow, measure wicks for institutional order flow. And he went over power three. He had a little teaching point on that. Every day we're looking for a possible ninth power three from 9:30, looking for that Judah swing and then opposing run after that jagged edge has been formed. A classic buy day does not just go straight up, um, especially during that lunch hour from 11:30 to 1:30. We're probably going to see that retracement on stops, maybe a full on reversal as well. So also that price continuum theory, which I think that him going into this has been like honestly a very good thing because not only I think that having the lower time frames is just such a big advantage because say you just want a little bit more confirmation, maybe you're a little bit more hesitant, which isn't the best thing to do because it kind of skews your risk. But then you can go drop down into a 5 second chart and even look for an entry there for a little bit more confirmation on that entry, which I like. I've been liking when he's been touching on the price continuum theory, institutional order flow entry drill, and then he kind of went over the Jackson Hole symposium. That's what we have this week. I do want to look at news because I haven't really been looking at news lately. We have the Jackson Hole symposium on Thursday, Friday, and it occurs Saturday. And then we also have Powell that speaks on Friday. So uh, Friday is definitely going to be a volatile day. Um, Thursday as well. Today we have meeting minutes, and obviously this is going to record after the fact. So today we have FOMC meeting minutes, and I will have a market review later today. So this is kind of just after effect notes. So um, where'd that go? So the Jackson Hole symposium, what he pretty much said is that we're likely to redeliver over ranges, and if we just pull up where we're at, if you just look at where we're at on the daily chart, I think that we're also primed for a consolidation, which I'm not going to talk too much about. We're just going to go over the notes and then some psychology notes, which I don't really need to go into too much detail because personally, I think psychology notes are a lot personal because I kind of take bits and pieces of what I like out of these, and you can obviously stop and see the kind of the notes I took. So yeah, let's go into the price action. So first, we want to start off with annotations. We have the entry that he took as well in the AM session. We had that breaker that we were trading into. We have a stop hunt, and then we have displacement here. So now that we have this displacement, this could possibly be a breakaway gap. Why? Because we have a balanced price range. We have a fair value gap in, fair value gap out. Price doesn't really even need to trade back into that. And then we have displacement higher, and then we have retracement beautifully into this down close candle here. And the fact that we have a real liquidity void right there makes this a powerful PD ray, is kind of what he was talking about. Is happening after 7 a.m. and it's happening during this macro. And also we have relative equal highs generated right below a new week opening gap. And since this new week opening gap is a larger range, we have this new week opening gap below 25% or 25%, 50%, 75%, and then we have that high. And look at where we deliver right to 25%. That's a low. That's low hanging fruit right there. 50% is actually what we trade up to, and look at that, beautiful. We're stopping right at that. Well, not right to the tick, but look, you can't deny that we're actually stopping at that level. That's the draw on liquidity right there. And yeah, just underlying order flow, bullish. Look at this wick right here. Constant encroachment gets respected. Displacement up to buy side. Very, very nice model here. Sell side taken, sell side taken, sell side taken. Then displacement higher. Where are we likely to draw? These highs right here. Simple, simple, simple. And this is that 15-second time frame right there that was used for entry. Sorry, I did these annotations a little while ago. Here I have PM session delivering into a breaker. But I feel this was the main chart I have, and there's kind of a lot on here. This is my kind of personal chart. Here we have equal highs that get formed after 9 a.m. We're dropping down, and this is how I So here we have this leg here lower. So we have displacement lower. So at this moment we have energy. What do you say? Energy. What do you say? I mean, I feel like, yeah, I don't know how to explain this in my interpretations, but we have bearish energy here, and we're coming back up, and this is just that initial leg to generate liquidity here. So we're not likely to just have a straight leg down and then a straight leg up. I had never really seen that before. It happens very rarely. So we have a straight leg down. It's more likely that we kind of consolidate here, come back down, take this low. That's more probable and more favorable. That's what I'd rather see. And it's having a straight move down to straight move up. I will note when we do have straight move down, straight move up, but it never really happens. So we create these equal highs here. We have this new week opening gap right here. We come up into these candles that he was talking about. He wanted to see displacement above that, and as you can see, boom, 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 and then it gets used as support later in the day. That also is that 75% level of that new week opening gap. We come up here, then we have this imbalance that gets respected here, change state delivery, order block gets respected, come back down to rejection block, which is a lower time frame order block. Then we come back up to this buy side right here, and we come back down to this low here. Price slams into I definitely cherry picked this low here. It's a very lower time frame volume imbalance from over here in London. I'm probably not going to show that here, but then we have that gets traded to perfectly. Then we have fair value gap in, fair value gap out. So we have a balanced price range right there, and then look at this right here, reclaimed inversion, institutional order flow entry drill happening as well. And we have this inversion for value gap right there. We have a balanced price range. Notice the wicks right here. We have a balanced price range right there. Stop can be placed below that, and trust that we do not need to trade back below that. And then here we have accumulation around this gap right here. This is consequent encroachment of this inversion right there. This all of this aligning, and then we also have a balanced price range right there. Like, all of this is just beautiful, beautiful stuff right here. Like, and then we have these candles right here, a reclaimed order block. Look at that. That's beautiful. That's beautiful. All happening within, from this doing range high to low, probably the 75%. I didn't actually grade this, but if you were to grade this, and if that was right there, that looks pretty close to 75%. If not, the bodies are being held by 75%. And we see buy side right there, 950 macro. We're not trading within a macro here, but then we have 1050 macro that boom pops up to buy side. And then we have from open at 930 to low, 930 opening price, open right there. This all is where smart money is accumulating longs. They're accumulating longs all throughout here. And then we had a daily power 3 that he went over and he discussed. Let's see if I have any other. Okay, so I have a lower time frame chart here. Look at that. Look at that concentration of that new week opening gap right there. Also, that level right there, that I don't know what he called it, the wicks or whatever. I think he just said that he wanted to see displacement above that. I don't know what PD array that would really be, which it's kind of interesting. Like throughout the lecture, like I feel like this is the thing. Like these two candles that he said he wanted to see displacement above that. The fact that we boom, 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 and then one more time use that as support. Like these candles right there, I thought that was that's kind of what stuck out to me the most, honestly, within the lecture. So we have. Oh, this is a different annotation. Dang, where did I get this from? Oh, it's the same thing. Oh, but here we still have that chart. So we have 50% of that. Boom. Trade back down to the rejection block. It was a lower time frame order block. You probably rewind to see that. Then we have a fair value gap right there. Trading up the buy side right there. Within this breaker, we have a breakaway gap right there. Boom. Imbalance right there. Boom to buy side. Then we come back down. Market structure shift right there. Imbalance right there. Boom. He went over immediate rebalance right there. That's what he went over during the live stream. Then we trade back down into that very lower time frame. Volume imbalance that I definitely cherry picked. And then we have a breaker right there. Boom. That's to that balanced price range on the lower time frame. And we also have a new day opening gap right there that offers support right there as well. We trade above that. We now claim a new day opening gap. Boom. Inversion right there. Institutional overflow entry. And then we come back down into that concentration of that level. Also into this inversion right there. Balanced price range. And just look at that beautiful support there. And then we end up seeking buy side. So he did go over a lot of that. Oh, I didn't go over. Oh, I'm not going to go over that right now. I didn't go over the PM session notes, which I just realized. Because this will be more important because he went over the 345 macro. How that's actually the market on close macro. 345 to 4. And then we have a 401 to 414 macro during earnings seasons. And what I've been noticing, what I've been backtesting is, if you watch the previous video that I posted, is that at 350, liquidity is injected within the market every single day. If you go down a lower time frame, you will see that every single day. There is more animation at that right at that 350 open every single time. That 350 5-second candle every day it is there. It's a stronger injection of liquidity, and we're looking for an SMT, all within this 345 to 350. That's all we're looking for. I've been backtesting this. Usually, most of the time, majority of the time, there will be an SMT that gets formed within this macro here. And at 350, we'll have that liquidity injection, and then we'll likely reprice to a level. Right here, 350 macro, boom, beautiful. And then we're closing in that daily SIBI close right there. Beautiful, beautiful, beautiful. This is the 1 minute chart, and then I'll pull up, I believe, a 5-second chart here. So we have a breaker right there. We have a stop point after the SMT. We're trading to a volume imbalance. We see displacement breaker, fair value gap right there, boom, order block right there, boom, displacement within this breaker right here. We have a volume imbalance. We have a lower time frame inefficiency mapped with a higher time frame inefficiency, and we see displacement there. If you look at 350, dang, I'm not gonna lie to you. I can't see that 350 opening price. But at 350, at the 1 minute candle, just look at these candles and then look at 350. Boom, inflated. Every single day it will be there. So yeah, that was that 350 macro right there. Very nice. And then I want to go over the PM session review. I thought I did. Do I not? Did I not have it? Okay, I do have it in here. Okay, 250 macro, 315, and then those are the macros in the final hour. So we have 4 of those, which I guess makes sense. But at 350, we will have that liquidity injection, which is what I've been backtesting. I want him to go over this more. And honestly, the PM session review was kind of just his expectations on the week. I didn't think it was there. There was too much value there, but obviously there was still a little bit of value. And yeah, that's all I got, and I will see y'all with the next one.